The Doc's new investment option.
Lead bullion.
Buy your ammunition from the Doc today at sdbullion.com.
When the Doc first envisioned SD Bullion, it consisted of providing consumers a product line of natural and organic medicinal and food options. First came colloidal silver, then came organic GMO-free survival food. Now comes the Doc's most complete medicinal option, Nutrigold, organic, GMO-free, whole food vitamin line. Unlike products formulated using synthetic vitamins and minerals, which suffer from issues related to poor absorption, poor assimilation, non-compliance due to metallic medicinal aftertaste, and tend to produce side effects like nausea when taken on an empty stomach, the Doc's new multivitamin line uses 100% certified organic fruits, herbs, and vegetables. Presenting the Doc's vitamin line, Nutrigold, safe, natural, wholesome, with no metallic taste, and better utilized by the body. Available within the Doc's medicine cabinet. There's a new type of gold in town, Nutrigold. Get yours today, only at sdbullion.com.
This is the Doc and Eric Dubin with SD Weekly Metals and Markets. Joining us this week is David Morgan, the silver guru from silverinvestor.com. It's great to have you back, David.
My pleasure. Thank you.
Why don't we get started off right away with the trading action in gold and silver this week, David, and we'll let you run with that. One thing I've noticed, particularly in gold, was big moves up on the Asian and Russian open every day, and seemingly the COMEX open every day as well, which is a bit unusual and likely tied to the whole Ukrainian crisis. But why don't we run through the week's trading in gold and silver, if you could, David?
You bet. So gold opened the week at about 1338, traded as high as 1388. As we're doing the interview here, and we're a few hours from the New York close. It started up really strong this morning, and it's up about $11 as we speak. It's held its gains for the week up. Stop the clock right here, it'd be $40 for the week. Silver similarly opened up below the 21 level, which I consider to be the breakout level. It opened at 2094, traded as high as 2177 again today, if we're doing this on Friday. And right now, if you stop the clock, it would be up, probably 25 cents, 30 cents for the week. I like the way the metals are trading here. The strength is good, but not great. With the geopolitical background, you expect them to be stronger, but we also know that there's the paper markets that drive the price, and that's why you could see both gold and silver open so strongly this morning, and yet as we're an hour from the close, as we're doing the interview, they've sold off, but are still holding their gains. Not really surprising to me to see it trade in this manner, but again, since they're holding their gains, I think it's showing good strength, and I think it will continue to do so. I am wanting to add that no one in their right mind would be short any of the precious metals over this weekend, not with this carry edict that Russia's got to do such and such by Monday.
Thought the same thing, and I said that to my guys at SD Bullion this morning. Wherever you do, make sure we're not short gold this weekend. I don't want to be oversold or short gold going into this weekend. Well, touching on the Ukrainian crisis, just coming across the desk here from Bloomberg this afternoon, Friday, is a story that Russia looks like has pulled $105 billion out of the Federal Reserve, and those are Treasury bonds held by the Fed in custody on behalf of foreign central banks and other official institutions. The Bloomberg chart shows really the biggest plunge in years just over the past week, and Bloomberg has come out this afternoon and pretty much named Russia. Obviously, it's circumstantial evidence, but it makes sense that Putin is one step ahead of the EU and the U.S.'s threats of sanctions and freezing Russian assets to pull those treasuries out of custody at the Federal Reserve. And now that doesn't mean necessarily that they've liquidated them onto the market, but it just means they don't want them held at the Fed where the U.S. can freeze those assets. They don't have access to them. You have any thoughts, Eric?
Yeah, sure. Well, actually, on that last point, it's pretty clear they haven't liquidated them on the market, because that enormous amount of pile would definitely be showing up in the bond market in terms of the pricing action. So, this report is pertaining to just the last week, or for the week ending March 12th, I should say. And so we're not even sure that it's 100% or 80% or whatever percent based on strictly Russian holdings. Actually, it would be interesting to research this, and maybe I will be able to get this done before I do the write-up for the show, but I suspect that it's possible to determine at least some percentages as to where Russia's holdings of the treasuries are, in fact, warehoused, whether it's within the federal system or within their own central bank. But then again, a lot of these are electronic deposits. But point being that whether it's Russian interests or Chinese or what have you, there is a general perception that as these geopolitical issues escalate and as the ongoing evolution away from the U.S. dollar and treasury holdings as a part and parcel of global reserves continues, and this evolution's been going on for years now, people who manage the reserves for the various central banks in the countries around the world are looking at this as kind of a game of musical chairs, and when geopolitical risks enter the picture, it's more dangerous when the United States and Russia are at loggerheads over the Ukraine and talking about economic sanctions, and Putin in turn retaliating with the threat of liquidating upwards of their $200 billion position within U.S. Treasuries, which was the news headline of a few days back. So all of this relates directly to the precious metals market, obviously, because people are looking at that as a store of value that rises above all of this fracas between the Western interests and Russia. And that's the main story for precious metals investors who are using gold and silver as insurance.
David, I want to get your view here on a little bit longer term perspective in the gold and silver markets. I'm of the view that gold and silver bottomed at the end of last year. I came out, I think it was December 21st, and stated it looked to me like metals were going to bottom within the next 10 days by the end of the year. And looking back on it now, it looks like gold did place what you could call a double bottom. I think it was, 1181 or 82 in gold, and silver didn't quite reach back down to 18, but it was about 1850. But pretty decent moves here for the first 3 months of 2014. Gold this week has surged through pretty strong resistance in around the 1350 to 1365 level. It's gotten through that, and we're within about $100 of a golden cross, where the 50-day moving average cross is above the 200-day. So I guess what's your outlook here, David? Will we see a golden cross in the next 6 months? And are we headed back to a retest of the highs in gold and or silver in the next 18 months? And I guess what's your look?
Sure. First of all, I've been on the private and public airwaves, so to speak, on calling the bottom of silver at the 28th of June, 1817 intraday key reversal. So far that's held, as you said, it got close to it once, and we built a base ever since then. And my breakout line was around 21, and we've been above it. When it broke out, it was a $1 move, a little over a dollar, held it the whole day. It was like over 5% move for a day. So it was very relieving for me to be able to write to my members that, silver can move up, and it can move up strongly, and we can see a 5% move up in a day. And it held that gain and moved up subsequently, reached about as high as 22, and I actually missed that breakout. I had done a radio show and called the $21 level as the breakout. The way I see it, this is an art, not a science. And when it happened, I had not gotten to my members, and I really feel some remorse for doing that. But I also told them I saw it coming back under the $21 level briefly, and again, on board that level if they choose to, which I have myself. Where are we now? Well, we're in a small cup and handle formation, and it's almost a classic cup and handle formation, with the cup being formed and the handle coming from left to right, going downward at a slight slope, which is the most bullish cup and handle formation you can have. The pivot point basis, that formation is $22. So I'm still looking for silver to move higher this year. I'll get to your, the three questions you really asked me. One is the gold. When I said all that about silver, I said I wasn't sure about gold. It could make a lower move, and it did a double bottom, as you indicated. So I think both gold and silver's bottoms are in. So that's the most important point I can make. As far as where they go from here, this is more, a studied view, very strong opinion, but I've been wrong. I've been a little too bullish at times, and actually not as bullish as I should have been at times. Nonetheless, I see us getting back up to the breakdown levels, where you guys did such a great job on your website and speaking about the $26 level, and I actually warned my members about that breakdown, and I wish I had warned them more in advance, but I only had the technicals that were so obvious that I knew it was going to happen a few days ahead, and I had a couple of hedge funds that called me up, and they were able to protect themselves, and hopefully anyone that, really are people of action had an opportunity to do so. Anyway, silver broke down at 26 and has been going down, and now we're formed a bottom and we're coming back up. Gold, it was around the 1550 level. So I think that this year, 2013, we're going to be able to retrace those areas as a minimum. So if you look at a chart of 2013, you had gold around 1600. It finished off around the 1250 level. If you had, or it got as low as that. If you look at, 1180 level. If you look at silver, it started around 32, got as low as 1817 I mentioned. And so those declines of 2013 could be re-achieved in 2014. Not that they would be, but they could be. So I'm looking at those breakdown levels again as a minimum upside target for this year. We're going out 18 months. Is a really good number to put me on the spot, because that's about the time I see for my work where the middle of 2015, actually 3 months past that, probably fall of 2015, there's going to be a new rush, and it won't be a huge rush, but the waves will be flowing, so to speak, that will be coming in, and people starting to say, you know what, I've got to get gold, I've got to get silver. Oh, it's getting hard to get. And it'll start being a little bit of a movement that gathers momentum and more momentum. It's the analogy, the best one's a snowball rolling downhill. It starts slowly, starts gathering momentum, gains more mass, and then more mass and more speed, and more mass and more speed. And that's what I see happening sometime in 2015. Would it be halfway through the year? I don't think so. I think it would be the latter part. But I'm looking for a blow-off top somewhere between 2016 and 2017. And the start of that, looking backwards, will be easier to tell when. Will probably be the latter part of 2015. As far as the Golden Cross, yes. I'll just say absolutely. That's going to happen.
Another year and a half then, in your view, before we start to see some real excitement and some momentum chase gold and silver to the upside then.
That's precisely correct. And let me just add that, that's unfortunate because most people buy with the herd mentality when very few people want it, it's probably the best time to accumulate, especially if you can't pick bottoms and no one can pick them consistently. I've done much better picking tops than I have bottoms, although I've been good at bottoms. I have not been perfect. So far, I'm good on this last one, the 1817. It looks like I'm going to be correct on that one. But nonetheless, now's the time. No one really wants it. The dealers aren't doing very robust business, although the Silver Eagle program is doing a robust business. I wouldn't say that's a special case, but it's a small case relative to how much physical silver sold in any given year. And it's encouraging to see that. But I talked to a lot of the main dealers and wholesalers. You mentioned coins and things, and some of these bigger dealers. I know Mike Maloney personally and have for years. I mean, they're not out of business or anything close to that, but they're not in the groove, so to speak, that we saw a few years back when business was much more robust than it is currently.
We did just see Tolving go out of business last week.
Yeah, I want to mention that. I only talked to the gentleman, I think, once, maybe twice at the most on the phone. I really don't want to say anything about him personally, but I do want to draw back to the 10 Rules of Silver Investing that I wrote well over a decade ago. And one of the rules, I forget what number, you can look it up on the internet, but it was don't get a raw deal from your dealer. And I went on to explain that don't get a raw deal from your dealer, that getting the cheapest price isn't always the best thing to do. And I elaborated on that premise. And I was chastised, especially early on, about not recommending Tolving again and again and again. I got a lot of emails. I didn't save them. I don't have time. And I never got defensive. I mean, and for a long time he did fine, but I've been in this thing a very long time, and I've seen a lot, and there's stuff I've missed, and I don't get it all, and I'm humbled by the market. I mean, all those things are true. But, you got to be careful. And what I teach is if you're going to buy from whatever dealer you choose, Start small. You want to take, I finally saved up, this is what I've saved up for the last 6 years, and I'm buying gold, and I'm buying it today, and I'm buying it from the cheapest guy I can. That is not good thinking. Good thinking is, with all those parameters I just mentioned, is I'm going to put in 10% of that with this guy and see how it goes. And maybe 10% with this guy and see how it goes. Maybe 10% with this guy and see how it goes. And then based on that, you might make a better decision on how to get the rest of it or do it over several months or whatever. But I get these horror stories too often where people buy stuff and they don't get it. Or they buy the wrong things. They get these what's called semi-NUMI coins that are a joke. But the salespeople are very good at pitching this idea that these things have got upside because they're semi-rare and all this nonsense. And they end up spending like 40% premium on these things and absolutely on the sellback have 0 premium on them. And that one really irks me. But anyway, I got off on a tangent. But I think it's good for your listeners because there's always new people in the market. And again, I am not a know-it-all, but I'm here to help as much as I can. So, this is something I do as a public service because you want to be careful, especially if you're new.
Right. It's same type of thing that I always recommend for new customers who are kind of wary of, and for a lot of people, even a $500 or $600 purchase, that's a lot of money for them. It represents a lot of savings and $5, $10 a week that they've saved up. That might be a year's worth of savings. So for new customers who, whether it's from us or really anywhere that you're spending a good size amount of money for you, I recommend that they do a search on the internet. In these days and age, if your company is defrauding investors, it's going to be out there in the internet. So if you search for the company name in fraud or anything like that, you'll find it. So that's another tip I usually try to give people. I want to get back a little bit here to the crisis in Ukraine with Russia and the Crimean referendum this weekend. It's looking more and more like Crimea will be joining Russia here over the weekend. I know, Eric, you've discussed lately that you think that's pretty much a foregone conclusion, but the U.S. and the West is going to push right up to that border. Is that right?
Yeah, I think that's probably the end game, and that, for lack of a better way of putting it, to be perfectly blunt, I think that the primary neocon faction within our foreign policy establishment in the United States that's driving this will be probably satisfied with seeing the Ukraine split up. And the Crimea, it has to be within Russia because Russia will go all the way to nuclear war to defend their only warm water port. I mean, that's just basic geopolitics, and there's really no way around that. And all of the people within the United States foreign policy establishment fully recognize that, even though they may be making a lot of bluster with John Kerry, for example, going and saying, well, there'll be grave consequences if the Crimea votes to join with the Russians and Russia absorbs them. But I believe that's more of a poker face, and that ultimately the most likely end game is that Russia will take in the Crimea, and whatever happens in the western Ukraine is up for grabs. I think that to some extent that's a lot more fluid than people recognize, because the forces that have been led to basically walk through an open door that the United States helped open by funding the forces on the ground there, and the protests that have been going on for the better part of the last 4 or 5 months. It created a regime destabilization that enabled the government to fall apart, basically. So that's fluid and will remain so. And it's kind of like what happened in Yugoslavia. I think that's the model that people should look at, because it seems to be repeating in this instance. But time will tell. Hopefully I'm right in assuming where the West is willing to draw their line, because if we don't have leaders who are just playing a very strategic and aggressive game of competition and aggression against Putin's backstop position as well, then you could have war, and that's in nobody's best interests. I mean, this is more like a financial war, a geopolitical game of chess in competition between West and East, and it also, again, ties into this whole maintenance of the U.S. dollar standard and the overall fiat financial empire that is at the core of Western interests. I mean, there's, You don't have to go into a New World Order style conspiracy framework to analyze all this to truly understand that, you have multiple industries and multiple interests within every country and every group of countries. And in the case of the United States and England and Europe overall, at the apex of all of those economic and political interests are the financial interests, because that's the biggest segment of the economies and their source of revenues and profits and so forth. So that drives geopolitics. And then you have energy and all that stuff that falls into that as well. I'm not discounting all of that, but I think really what's most interesting about all this is that there is, to some extent, to a very large extent, a financial aspect of this low-grade war that we're seeing playing out. And as folks that pay attention a lot to the precious metals, that's obviously a theme to take a look at. And I'll once again, like as in last show, point out that Paul Craig Roberts has been writing about this, and his writings have been unbelievably lucid. And I highly recommend everybody in the audience to check him out, because I think he has the diverse background in economics and geopolitics to really understand this stuff and explain it to people in just layman's terms. And unfortunately, what he speaks about and what others are talking about are a level of analysis and ideas that you're not seeing in the mainstream media. I mean, we're basically being fed a bunch of BS when it comes to what's going on, and most Americans are not getting exposed to the kind of stuff that we talk about on this show. But as it is, that's where we are. So, we're going to see a lot of hyperbole, a lot of tensions going through the weekend, and Crimea is going to vote to join with Russia. It's obvious. And next week, we're going to see a lot of theater in response. Hopefully, cooler heads will prevail. But all the while, this is going to be something that's going to be bullish for gold and silver in two respects. As the general desire amongst people to have a hedge against geopolitical risk, that will play out. But below the surface, this really is part of the overall multi-year process of the United States dollar beginning to erode as the world's reserve currency, and there's a geopolitical conflict at a low-grade level that's being played out, to support the dollar and to make the transition slower, and perhaps maybe even give the United States an ability to have a stronger negotiating position vis-a-vis the BRICS countries in particular, and their efforts through the G20 to make this evolution speed up more towards their interests versus the interests that are behind the United States dollar. And that's the big picture that's playing out here.
I wanted to give the listeners a quick update on the physical retail market in the U.S. And I'd agree with what David alluded to a little bit earlier, that overall there's not too much excitement on the retail side right now, and dealers are doing okay, but nothing like the frenzied buying that we saw about this time last year and really continued throughout the summer. With the exception really of the U.S. Mint products, which their production, their allocation, I guess I should say, to the authorized dealers, I believe it was last week or the week before, they bumped it up by nearly 50%. And so for Silver Eagles, we're up to closing in on 11 million ounces sold already, which is still a very big number. I think it's on pace for near, if not at another new annual record. Would that continue throughout the rest of the year? We're on pace for about almost 5 million ounces sold in March here. We had 3 3/4 million ounces sold in February, and the 4 3/4 million ounces sold in January. So the Silver Eagle sales remain strong, but premiums, we did see premiums drop about 20 or 25 cents an ounce this week, with the Mint's increased allocation numbers for the authorized purchasers. And then the other big story in the physical side this week was on Monday, the 10th, when the U.S. Mint began selling the Platinum Eagles for the first time since 2008. They haven't sold too many. I think it's just shy of 9,000 for the first week, but a lot of investors are pretty excited to be able to purchase the Platinum Eagles again for the first time in, what has it been, 5 or 6 years. Any thoughts, David, before we wrap up the show on platinum, investing in platinum and the Platinum Eagles relaunching?
Yeah, that's we've wrote something recently on platinum palladium. We're actually a little more favorable to palladium actually than platinum, but we put the reasons why in the report. There are two kind of overlooked metals. Certainly it wouldn't be a first purchase situation for anybody that's a precious metals investor, but it's a very, very tiny market. They are extremely rare. The amount of investment in them is very small, but that means any new investment could drive the price substantially higher. They are needed in industry. They're really not considered monetary metals. The dynamics behind them are really, really strong. And the platinum market primarily comes out of South Africa, which is a mess, and they're unable to mine it at the current costs. And the miners are demanding higher wages, and I'm not saying they don't deserve them. All I'm saying is the dynamics are what they are. So that puts a curtailment on production. And then on the palladium side, there's a lot of it is controlled by Russia, and no one knows what the real inventory is. But both these metals are critical for certain catalyst properties other than catalytic converters. And I like them. I think it's something that you could consider adding, and there's several ways to do it. Of course, I'm always demanding physical first, but outside of that regime, we've got Stillwater Mining in Montana as a stock play. There's a palladium company also listed, North American Palladium. You also have ETFs, which is probably one of the better ways to play it on a paper basis only.
Right, and I thought it was interesting, if nothing else, the fact that the U.S. Mint finally reintroduces the Platinum Eagle, which, as you alluded to, is most of the world's platinum supply is mined in Russia, right in the midst of the Ukrainian crisis with Russia. I thought that was at least interesting. But before we wrap up the show for this week, David, if you can let all the listeners know where to find your work and subscribe to all your different services.
You bet. For anybody that wants information for free, the YouTube channel is probably the best way to get information, and that is Silver Guru. So just go to YouTube, type in Silver Guru, you'll find our channel. Second way is Twitter. On Twitter, I put out the news feeds that I'm reading that I think are critical. I certainly don't put out everything I read every day, but usually the top 2 or 3 that I think are, really critical, especially in these days. And then as far as getting a little more deeper insight into how we think and what our work is like, there is a free e-letter that comes out every weekend that is for free, and that's right on the top of the website. You can get on that pretty easily. And then after that, if you're a serious precious metals investor, if you're interested in money, metals, and mining, there are 3 levels of subscription that are over on the right-hand side of the website.
Okay, so we all highly recommended, and David Morgan's commonly recognized as one of the leading experts in precious metals in general, silver in particular. So highly recommend you checking out all of David's work, both what he offers for free as well as those subscriber services as well, where you can get advanced notices of some of those calls that he makes on both on the price side and the futures and the trading, as well as the miners as well. So once again, David Morgan from silverinvestor.com. David, thanks again for joining us. It's always great to have you back on the show.
Thank you very much. Appreciate it.
All right. So for the Doc and Eric Dubin, thanks for tuning in to the SD Weekly Metals and Markets.
The Doc's new investment option.
Lead bullion.
Buy your ammunition from the Doc today at sdbullion.com.